Hi everyone, I'm Damien.
And I'm Jeremy.
Welcome to our Suburb Data Podcast, where we cover everything from property investing to expert busting. If you're new here, we share our personal and professional experiences from 24 years in the game, so you skip the mistakes we made and go straight to property investment success. And today we're going to be discussing, does rent growth match property growth part 2. So we did get a question from a listener that we will be breaking down. So I'll be sharing my screen, so there will be visual aids.
Yeah, so in episode 10, we responded to a question about whether rents have kept pace with property values over the long term, and we showed this chart. So if rents grow at the same rate and at the same time as property values, then the yield should remain constant. So this chart shows the national yield, the combined capitals, that's Sydney, Melbourne, Brisbane, Perth, Adelaide, etc., and then the regional yield, combined regional yield. That's the purple line there, which would be places like Wollongong, Newcastle, Geelong, Townsville, Toowoomba, Gold Coast, Sunshine Coast, all those large cities that are not the state capital. And so if what I was saying was that if the yield, if rents keep up with property values, then the yield should just be a flat horizontal line across from left to right. But instead, you can see there are eras where it goes up and down.
It would be flat, that's right. So, and this is gross rental yield, so no, not net yield, because net yield would be after the expenses, but expenses can vary due to council rates, maybe insurances, strata fees. So gross yield is what a lot of people refer to from that yield perspective when you're shortlisting suburbs.
Yeah, and we were answering the question, does rent keep up with gross, with property values? So, yeah, we are looking at gross rental yield. If it was net yield, it would confuse matters.
So we've got Oil Baron 100 sent a note through.
Yeah.
So, hi, Jeremy. Love the video. Very helpful content, and the video length makes it easy to watch. Just a couple of suggestions. Could you please, I don't know why I read that, but that doesn't matter. Could you please put a horizontal line of best fit on the same graphs for each rental yield to show the 20-year average or median rental yield for each category or city? Could you also plot the median house price on the same graph so as to show when price growth is happening, so to give more context on why the rental yield as a percentage is changing? So you've done some analysis on this, haven't you?
Yeah, if you could show us the next slide. It's got a pretty busy chart here. So this is the same chart, but with all the extras that Oil Baron asked for. It is a bit busy, so let me just break down what's going on here. But I think the message that he was after comes through. So starting at the top, I've added the long-term average yields for the nation, state capitals and regions. So national growth long-term average has been 4.2%, and it's lower for combined capitals, higher for regional markets. And I've also plotted a linear line of best fit for each of those three groupings. That's the dotted straight lines that you see. Apart from regional markets, there doesn't appear to be, there does appear to be a slight decline in yields, but if you look along those dotted lines, the only one that you could say is level would be the purple line, which is combined regional. But certainly nationally over the last 20 years, there's been a slight decline in yields, which might suggest that rents have not managed to keep up with values. But when you look at the curves, you can see that there are eras when rents actually grow faster than property values and vice versa. So I wouldn't read too much into those dotted lines. And lastly, I've got the stacked areas at the bottom. These show the growth in the property values. So nationally, state capital again. So national is the white one. The combined capitals is the turquoise, and the regionals are in purple. Now, the thing you'll notice is that when there are eras of sharp rises, that's in property values, there are dips in the yield. For example, 2021 or across 2021, where the stacked area plots all rise rapidly towards the right of the chart, the yield curves dip over the same time frame. And similarly, when property values decline, you'll notice that yields rise. And there's an example of that in the middle of the chart. From about the start of 2011 to the start of 2013, there's a dip in the stacked areas, but a rise in the solid lines. Now, the obvious exception to all of this is the far right of the chart. If you focus on the white curve, which is the national yield, you can see that it's actually rising in the last year, and this is while property values nationally have also been rising. And the reason for this, of course, is because rents have been rising at a faster rate than values. So both rents and values have been going up, but rents have been going up faster than values, and that's why you see the yield rise, which means it's been a very good time to be a property investor. So it appears as though rents have been more stable historically than property values. The big changer of yields is usually due to a change in property values rather than rapid changes in rent, except for the recent price. Now, the oil baron did want me to do this for the big 5 cities. If you go to the next chart, I did try and put most of it on there, but as you can see from this next chart, it was starting to get pretty crowded with all the curves and the trend lines. So the stacked areas would have just made that worse, so I left those off. But you can see the average yields for each of these big 5. And 4 of the big 5 have been trending lower if you look at the dotted lines, Perth being the exception. But I wouldn't pay too much attention to those dotted trend lines. As I mentioned before, you can see from the curves there are eras of growth in yields and eras when yields decline. So I would expect those downward trend lines to lift. Over the long term, I'll bet they all approach horizontal. And that's good news for investors, not such good news for renters. Sydney and Melbourne yields need to lift by about another 0.5% for them to come back to around about 3.5%. That's 0.5% on top of any growth in values that happen at the same time. So if the Sydney median stayed put at around, $1.5 million, rents would need to climb another $150 a week. But if prices climbed another 5% in that same period, then it might be closer to, $160, $170 a week. But these things tend to play out over more than just a single year. So renters have tough times ahead for a few years still.
I think the Perth, looking at that as an example, has definitely seen a lot more investors going into that market. I think yield's got a big factor in that.
Yeah. There are plenty of investors who are pursuing yield, but especially when Perth's property market has had such good growth potential as well. No reason why investors shouldn't go there.
It's interesting. If we look at the previous graph where it's sort of trending lower, that yield, like the average yield, isn't it, when you sort of look at it, but not significant. If you look 20 years ago for maybe, let's say, the combined regional markets, it was maybe, 4.8 maybe, and it's sort of come down to maybe, 4.6, 4.5. So yields drop slightly in a 20-year period. But if you saw the yield go from maybe, let's say, 4.8 down to 1% or something really low, you might look at alternates for investments, i.e. shares for yield, maybe if you need more of that cash flow.
Yeah, but I think it's really just a cycle that we haven't seen play out yet because we've only got 20 years of yield history. I think that if we were looking at a 30-year chart here, those 3 lines would probably be pretty close to horizontal.
Good stuff. All right.
Yeah, so good questions, Oil Baron. Thanks very much for that. And if anyone else has any questions, feel free to let us know in the comments Let us know if you like this sort of content and click on like. And if you want more and more of this, you can subscribe. There's also a share link if you think someone else might benefit from this.
Thanks for tuning in, everyone, and see you in our next episode. Bye for now and take care.